investment managers active in France, in the UK, in Germany, in Holland and in Spain. We do acquisition, financing, asset management, property management. I mean, like a one-stop shop. Over the last few years, we've been particularly active in Germany, which has revealed to be the most active and most successful market. A bit less in France, a bit less in Spain. We're starting now again with the Netherlands, and we will speak about it. But the UK, we actually stopped activity like 2 years ago because of overheating market.
Well, we're from basis a German company, German construction company. We've just bought a large company named GVA in the UK because for us it was essential that we place ourselves in the core markets of Europe, which, following our investors, are German main cities and London. So we had to be in London, that's why we bought them. So those two are incredibly interesting markets for us. We're also very strong in Amsterdam and Switzerland and a few other cities. But for us, the core focus points for the coming 1.5 year, UK, London, Manchester, Birmingham, a few other cities, and the top 5 to 7 German cities.
I'm based in London, so I see it with my own eyes. I think if you ask investors what are the 2 core markets, and if you are an Asian investor, to which markets do you go first? Well, they all go to London first, and then the next one on the list is Germany. So I think both have the similarity that they are seen as the biggest markets. And if you look at the market share that's reflected in the market share, the UK is about 35% of investment in Europe, and probably Germany is around 20%. So they're quite big in that sense. I think the difference is that I think the UK, particularly London, is a much more liquid market. It is much more international. So although we have seen UK investors coming back, but we had years not too long ago, 2-3 years ago, that 80% of investment buyers in the city were from overseas, as the English call it. Well, in Germany, you always have that very strong domestic group of investors. So in that way, the biggest difference is that London is much more, I would say, international and hence more volatile. And in Germany, you have that stability from a very strong domestic investor base.
I think comparing Germany with the UK, we see some similarities. We see, of course, a lot of capital being present to invest in both markets, especially in London, but also in Berlin, making yields at a very competitive level. That's meaning too low. So this is a similarity. When I'm looking at things like the rent level, I think there Germany offers a lot of potential because the rent level is rather low when you compare it to that of London. I think in both cities at the moment you see a lot of building activities going on. But whereas in Germany, in the bigger cities in Germany, you can really there's not a ceiling in the demand. So there's such a huge demand for new residential units, and so prices are still going up there. There's a bit of a difference in when you compare it to the London market, because especially in the center of London, of course you see the price more stabilizing over there, not having 20% value increase in 1 year anymore. So maybe in the city center only, it's around 0, I think, and only in the outskirts of London we see a price raise of 7-8% a year. So that's a bit different than in the German story, where there's really a lot of demand still also from the people who use the units.